So we're looking at AGNC right now. This is for Tressie, basically showing some indications on whether we think it's a good time to buy or not. All right, so this is the daily chart. Okay, just a few things that we always want to go over. Also, I included a few different things for y'all in the back end members area and class 3 course material. Go back there and you can look at the indicator checklist as well as the trading checklist and the trading notes. All right, so you could print that stuff out so that you can have it in front of you so that you can mark off all the things that you're looking for. Okay, so if I just pull up the trade entry checklist here. All right, few things that we want to make sure that we're looking for. Okay, um, obviously we want to have the daily chart up, but we talked about top-down analysis starting from the monthly, just so you could see an overall structure and what the market looks like, and then obviously if you see any patterns here, that could be significant. Also, when you go down to um, the weekly, all right, that could be significant as well, just to see what's going on. Obviously, now we see on the weekly chart, the 50 moving average is under the 200, but price is trying to work its way up, okay? So that's a good sign. And we move to the daily chart and we can see that the daily chart already has the 50 moving average crossing the 200, all right? So now we're in the uptrend, okay? So again, when you're going from top down, you'll see the bigger time frames are reacting slower than the smaller time frames for obvious reasons. The market is going to move from the smaller time frames first, and then the bigger time frames are going to catch up. But we start from the top down because we were looking for structure. All right, we're looking for structure so that we can see what direction the market is heading overall. Okay, because the bigger time frames have the stronger moves than the smaller time frames. So we want to look at the big time frame so we can see where the strong move is, where the structure is, if there's any big patterns. We want to see that on the big time frames first. So we go from the monthly to the weekly to the daily. Now we're at the daily and we focus on the daily because we're everything that we're doing is long terms. We're not day trading. I'm not teaching you guys how to day trade. I'm teaching you how to use option strategies. We're probably going to hold these option contracts for more than a day. All right, so we're not considered day trading. Okay, we're going to get in and we're going to get out within a matter of 2 days to maybe even a month. All right, so we would be considered swing trading, as far as the terms that people use. All right, so we're going to focus more on the big time frames when we're trying to figure out when we're going to go in to a specific security or a stock. Okay, so the daily time frames is showing us that it's in an uptrend now. The 50 moving average has crossed over the 200, which means we're in an uptrend, and there's obvious trend line that you can actually place on this to show you that it is a clear uptrend. Okay, now and we're going to focus on each individual candle. Each individual candle is 1 day. All right, but again, you have to look back in the past to see what is happening with the actual stock. So today is a green candle, not a full body yet, okay, but it's still 11:39 a.m. right now. So not a full body yet. Obviously, this wick shows us where it could actually go. But if we look at yesterday, we saw yesterday was a huge red candle. Now, when you have a huge body like this, that's very, very convincing that there's a whole lot of sellers in AGNC right now. So in order for me to feel comfortable about going in on a long entry, I need to be sure that the sellers are completely gone and it's now buyers in place, okay? Yes, it is a buyer's market because we are above the 50 moving average and the 50 is above the 200. So there's a good separation here, but you still want to minimize your losses by getting in at the right time. So if we came in right here for a long-term buy and hold on AGNC because it is a good dividend-paying stock to hold for long-term, it wouldn't hurt you too much. Yesterday wouldn't have hurt you too much because we have a long-term scope on this specific stock. All right. So if you would have came in on the 24th and felt good about what you did, and then on the 25th you had this big drop, you wouldn't feel so bad about it. It might look like a bad thing when you're looking at your portfolio, but on the grand scheme of things, our outlook is not now. Our outlook is way in the future. Okay, so there's dividend day. We missed that. All right. So if you would have had your situation straight way before this, you would have been able to get those dividends, regardless of the stock price. You feel what I'm saying? So if your purpose of investing in this company is for the stock value as well as the dividend payment, then yesterday's movement wouldn't have hurt you as much. It would have just looked bad on your portfolio as far as a negative. You would have had some red on there. But overall, you would have still been okay because it's a dividend-paying stock, all right? So let's just get that out the way. Now, as far as the entry is concerned, you're looking at the previous day, and you're looking at how many sellers was here. You're looking at the volume, and you're seeing the stochastic, and you're seeing the RSI, and everything is telling you that there's no clear indication that the sellers are completely gone because there is no reversal pattern here. There is no bullish engulfing candle here. It's just this small candle with two big wicks and a small body for the day so far. Now, by the end of this day, if this candle's body gets all the way up past here, then we're good. But because there was such a bad day yesterday, you're probably going to need 3 or 4 more bullish candles to get over what you lost from yesterday. But again, we're in this thing for the long term, so we're not so worried about it. Only thing that you want to be sure of is you want to make sure that this candle doesn't turn red, and then we have red, 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 red. When that starts happening, now you need to start making moves and trying to figure out how you can cover your losses. That's why options trading is so important, because once you get to a position where you start seeing yourself lose more money, then you can have stop losses in place or at least alerts in place to let you know, hey, it's time for you to protect yourself. All right. So we use the 50 moving averages to tell us whether we're in a buyer's market or a seller's market. What you could do is you could set an alert on your 50 moving average to let you know when price gets close and it actually crosses your moving average. Then you want to protect yourself by using a cover call. You know, you could take a cover call. You could do an option for a cover call to sell your 100 shares or however many shares you have at a specific price at a specific date. So that way you can actually lock in your profits. And then and if price turns around and starts going to the upside, you can buy yourself out of that contract and still keep your shares, never having to sell your shares. But in case there's a huge crash and you lose damn near all of the money that you put in, you had that cover call option in place so that when that date comes and if the price is down when that date comes, when the expiration date comes, you already agreed to sell your shares for a higher price anyway, so you didn't lose no money. All right, so that's why options are important. You could use them to get into a trade. You could use them to get out of your position. You could use them to protect yourself from major losses. It's going to cost you some cash up front, or you're going to actually make cash up front, but it might cost you in the long run if you want to buy yourself out of that position. All right, so let's get to this trade entry checklist. So on the daily chart, we have to make a decision. Is it an extension or a retracement? Right now, it looks like a retracement. You see the price topped out here, and now it's going down. So this clear retracement, okay? What is the trend? Are we 50 moving average 200? Where's the placement on the 50 and 200? The 50 moving average is clearly above the 200 moving average, so we are in an uptrend, all right? Fibonacci, can we place the Fibonacci on this sequence? Yes or no? This is the daily chart. So you want to go back you can do it two ways. You can go all the way back here to where the cross actually happened, go from swing low to swing high. All right, because we're in a actual. You said that we was in a retracement, so you want to place the top of your Fibonacci on the top where the extension was over. The extension ended here, so now you're in a retracement. So it's retracing here. You could do it that way, or you could go this way and go from this price sequence here. All right, either way wouldn't be wrong. Okay, so you could take the fib and you could put it on the low point here and the high point here, and now you can see where the retracement is at. The retracement has stopped around the 618. Now it's working its way back up, trying to cross back over the 50% level. And once it crosses the 50% level, you can kind of feel a little sigh of relief because you know that it's about to be going into an extension again. All right, so that's for the fib. Now, as far as the chart patterns, do you see any chart patterns? I don't really see any chart patterns as of right now. Okay, so there's nothing here that lets me know that there's a reversal or anything else going on to where it might alarm me. Maybe a potential head and shoulders pattern could be coming up. It depends on how you're looking at the market. You could look at this thing and say that there is a head and shoulders pattern. I'll pull up the pattern cheat sheet, and I actually added an extra pattern cheat sheet for y'all because I left a few of them out. So let me pull that up as well. I got this one. All right, I got this one too. Okay, so for the new chart pattern cheat sheet, you can pull up some ones that we didn't really go over as of yet. All right. Now, all right. So we talked about the double tops, double bottoms, triple top. Okay. So it could be a triple top, 1, 2. Maybe it'll jump back up here and go down. We don't know. All right. We see this a lot with stocks that can't get past a certain price level and it keeps bumping up against a resistance level and going down. You'll see a triple top there a lot of times. Head and shoulders. All right. Head and shoulders, when you have one shoulder and then you have a head that comes out higher than the previous, and then it goes down and then it has another shoulder here. And then when you see that, that's almost like a pattern to let you know that it's about to be a drop. All right. So this could be a potential head and shoulders pattern forming. We don't know yet. We have to see what happens when this retracement is finished. But you're on alert. Okay. So you know what the formations look like. As of right now, I don't see anything. All right. So we can move on. All right. Candlestick patterns. Right now, for the day, is small body looking like a doji at this particular point. All right, we pull up the candle cheat sheet real quick so we can see if there's anything on here that we can recognize. As of right now, I don't see anything yet because the day is still early. It's not even noon yet. So as of right now, all I see is a small doji situation. All right, it could potentially turn into a morning doji star, or maybe even I would say probably morning star or morning doji star as of right now. I wouldn't say dragonfly, not even a hammer. Possibly a morning star or a morning doji star at this particular point. Right now, this is a doji, and it's not really, the body is not defined. So for me, what I'm thinking is this thing might continue to go down. As you see, it opened up lower than it closed on the, so opened here, closed here. So it actually opened up higher than it closed, but it didn't take up it didn't even take up half of this body. You know what I'm saying? Now the body is barely anything here. So I still see seller pressure. So when I say, it's too much seller pressure, what that means is pressure. Just think about pressure, something pressing the market down. The sellers are pressing the market down. The buyers want to push the market up. So the buyers want to push the market up. The sellers want to push the market down. So When I say, oh, it's too much seller pressure, that means that yesterday, big sellers here. Today, the buyers are trying to show up. You see the candle is green. You saw the body, it was a little bit bigger, but there's too much pressure coming from the sellers. They're still selling their holdings off, which is pushing the price down. All right, so that's the daily. Obviously, we look at the RSIs and the stochastic, overbought, oversold. Nothing is overbought, nothing is oversold. The market is kind of in the middle. So there's nothing overbought, nothing oversold. We're still trying to figure out exactly where we want to go. But you see that they're pointing down. All right. So now we move into the 4-hour chart. And now you can see how price is reacting to the moving averages as well as the pressure. So seller pressure was here. All right. Seller pressure here, okay? Now, big little doji right here, okay? You got the doji here, you got the small body here, and then you got a big wick with a body that's trying to form. Now, the volume is coming up, okay? The stochastic look like it's oversold, all right? Now the stochastic look like it might be crossing and ready to go up, as well as the RSI looking like it's about to point up as well. So now you're starting to see buyers show up, okay? Now we're on the 4-hour chart. You see the buyer show up. 8 minutes, 30 seconds left on this. This white line right here shows me where the market opened at. So the market opened at like 15.99, and now it's up at 16.04. Not too much separation, but you can see that people are starting to come to buy into this specific stock. Also, the 50 moving average is acting as support. Support meaning when the price goes down, it finds a level of support to stop it from going down further. All right. So the 50 moving average is stopping price from continuing to go down. So this is a resistance point that is significant and is also going to help us decide whether if we want to come into this trade or not. Now you can see seller pressure showing back up again. All right. Now let's move down. All right. So now we understand where we're at. From here, you can also put the Fibonacci on here as well and see where the retracement is. We're on the 4-hour now, so this price sequence is good enough for me to see whether I want to go swing low here to swing out high here. This is a good fib. This is a good fib measurement for this specific price sequence. All right. You see price go up, small retracement, but it topped out here. Now the retracement is going down. And the 50 moving average just so happens to be right under the 618. All right, so price stopped here, and now it looks like it wants to start going back up. This is a perfect Fibonacci measurement right here. And if price finds its way up above this 50% level, then we're confident that it's time to go in for a long entry. All right, so we've already established that from the daily chart, price look like it's slowing. The sellers look like they're slowing down. Okay. On the 4-hour chart, price looks like it's trying to work its way up. It looks like some buyers are showing up. You got a full green candle here on the 4-hour chart right after a doji. So it's basically telling you that the sellers are running out of steam and the buyers are trying to show up. All right. Then today you see this long wick. So there's indecision from the buyers and the sellers. We don't know how many are on either side. It could be more sellers than buyers, but more buyers than sellers. It's like a tug of war right now trying to figure out who's going to win this thing. 5 minutes and 53 seconds left on this. All right, so after 5 minutes, we'll be able to see what happens with this particular candle, and then another one will open up for another 4 hours. All right, so that's what we got here on the 4-hour. Now we go back to our trade entry checklist and see if there are any patterns. All right, if there are any candlestick patterns. We just went over a few candlestick patterns. The trends referring to the moving averages. You see where the moving averages are. Overbought, oversold. You see that it's oversold right now, referring to the stochastic, and the RSI is not telling us anything about whether it's oversold or overbought. It's still in the middle. So as of right now, it looks like we might potentially be ready for an entry, but I would feel more comfortable when price gets above the 50% Fibonacci level and the stochastic is actually out of the oversold territory. All right, I need to see more green. Okay, now we don't want to place any entries from the 4-hour chart. The 4-hour chart gives us an overall judge on what direction we want to go with this specific stock. But we're not going to place a trade yet. We want to go down to the 1-hour chart so we can see more candles and we can see more of what's going on. All right. When you see price go below the 50 and the 200 moving average, it lets you know that there is a strong amount of sellers here, but it's just a retracement at the end of the day. So this shouldn't alarm you too much. Just know that it is a retracement, and when the retracement is over with, price could go up just as quickly as it came down. As you see back here, price went all the way past the 50 and the 200, then it came right back up and went up into the buyer's market. So this is a 1-hour chart. The 50 moving averages and the 200 moving averages aren't as significant on the smaller time frames because the price is going to move more frequently on the smaller time frame. So you're going to see price go in and out over and above these moving averages when you get down to the smaller time frames. But it will give you a good signal on whether you should come in or not if you're going to use them for long entries. Just know that these can serve as support and resistance as well. As you can see, price tried to get above the 200, but it didn't. Price tried to get above the 200, but it didn't. Now it's going to try to get above it again. If you wanted to use the 200 moving average as a signal for you to enter a trade, you can do that. There's nothing wrong with that. I do that very often. So if I see that the 200 moving average has been a resistance level for this price more than once, then I'm probably going to use this as a way for me to measure if I'm going to come in or not. This was a 1-hour chart. So you could set a price alert here on the actual moving average. All right. All you have to do is right click it and add alert on moving average. Okay. If you wanted to do that, you could add an alert on the moving average. And you can say price, let's see, price is crossing. All right. So no, we want to go to enter channel, less than channel, greater than. Let's go crossing value. No, we want to, you know what? This is what we want to do. We want to set an alert on the actual price for price to go above the 200 moving average. So we want the price to get to like 16.19 before we come in. So we can set alert right above the 200 moving average. So that way we know when price has gotten close and if it crossed over it or not. Once it crosses over, then that, to me, that would be a good sign for me to come in for a long entry. All right. But that's just an example. You don't have to use that. That's just something that can help you with your signals. Okay. Now, volume profile, something that we haven't gone over too much. This is the volume down here. Obviously, the candles will show you what direction they're going, but the volume will tell you how much sellers are in the game. Okay. If you see a big movement like this big candle right here, but then there's small volume, then that lets you know that it might be a fake move. All right. But if you see a big candle like this with big volume, then that lets you know that it's a real move and it might continue to go. All right. So this line right here is also like a moving average for the actual volume. All right. Anything above this moving average to me is serious. All right. Anything below this moving average, I'm not taking too serious. Okay. So you see this big red candle here, and then the volume profile is above the moving average. I would take that serious, but we already understand that because we already in a somewhat this is a retracement anyway. So I'm not really too much concerned about the volume until I see the opposite. So this green candle right here, if this thing finishes up and the volume for this is above the moving average and even might go past the previous volume profile, the volume bar, then that lets me know that we're about to be back into a buyer's market because a whole lot of buyers have shown up. Just like this green volume bar down here, it lets you know that this is a serious move. Even though it's a small candle, you see what happened after. All right, green, small red, green, 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 went all the way up and then it turned back around. All right, so that'll let you know that it's going to be a good move for a good amount of time. All right, so that's enough on the 1 hour chart, basically letting us know where we're at as far as entries are concerned, if we're going to come in here, if not. All right, a lot of people use the 1 hour as an entry chart. I just use it to let me see what everything is doing, and then I'll check some stuff off of this list if I need to. Also, you can start looking at your pivots on here as well. When you get down to the 1 hour, you probably want to start looking at your daily pivots. All right, you see price opened up under the pivot, so we're still in a seller's market as far as the 1 hour is concerned. But when you move to the 4 hours, it's going to just show you a retracement. So for day traders will look at this as a seller's market, but we're not day traders, we're swing traders. So we're looking at this as a retracement. But either way, it's very significant because your entry, you want to come in on your entry and get as close to the profit as you possibly can. So when we scale down to the smaller time frames, what we're doing is we're getting ready for an entry, and we want to walk into a green day. We don't want to walk into a red day. So if I came in for a long entry today, right now, I could potentially come in losing money. But then tomorrow it might turn around and go back up like I thought. So I'm just trying to put you in a position to where you can start seeing plus in your account straight out the gate rather than negative, and then trying to work your way up, because it helps with your psychology when you come in at the right spot. All right. So that's the 1 hour. All right. Now we go down to the 15 minute, and by the time we get to the 15 minute, we're ready to see if it's our time to come into the market, yes or no. All right. Now, I'm on the 15 minute. All right. I can pull up the pivots. We already know that price opened under the pivot. All right. One thing I can say is I need price to get above this pivot before I come in for a long entry. All right. That's just mandatory for me. If price doesn't get above this pivot, then I'm not thinking about coming in for a long entry today. Let alone the fact that the 50 moving average and the 200 moving average have to get crossed as well. Now, there's nothing here to tell me that price is going to respect the 50 and the 200 moving average to the point to where it might reverse on me. I'm just saying that I need to see what's going to happen here. But before it gets here, it has to cross over this pivot. If it doesn't cross over this pivot today, I'm not coming into the trade, point blank period. I'm not coming in, all right? Because it's too much seller pressure pushed this into a retracement. And then for the day, I'm looking at this candle right here. This candle pretty much shows me that this ain't even this. They really not ready to they're really not ready to show up yet as far as the buyers are concerned. Let me pull up the candlestick cheat sheet. The candlestick cheat sheet will tell you what that means. Shooting star, you can look at that as a shooting star. And I wouldn't consider it a dark cloud. I would look at it like a shooting star. Even though the body is bigger here, I'm looking at this as a shooting star because look, nothing is higher than this. You know what I'm saying? Nothing is higher than this wick. And this wick is so big with this small body at the bottom. That's when I said seller pressure, too much seller pressure. I sent that message around 10 o'clock because I seen this candle on the 15-minute chart. This candle on the 15-minute chart let me know that it's too much seller pressure still here. I need the sellers to leave. I need the sellers to be gone before I get into the trade. Now, again, you can go on the 4-hour chart and say, yo, price is looking like it's going up. I'm coming in. You would not be wrong for coming in right now. Nobody would look at you crazy if you decided to enter this trade for a long position looking at the 4-hour chart. All right. All I'm saying is if you want to minimize your losses as much as humanly possible, then you want to continue to go down to the smaller time frames so you can see exactly what's going on the inside of the actual market. You want to get into the body. You want to look at the organs. You want to look at the blood work. You want to look at the lungs. You want to get inside the body to see what's going on with the internal stuff before you start judging everything off of the external and how it look on the outside. You get what I'm saying? So go down to the 15-minute chart, and that way you can see exactly what's going on. And then when you start looking at these pivots, you see all this resistance here. You got a resistance with pivot, you got a resistance with 50, you got a resistance with 200, and then you got the actual resistance for the day up here at 1636. Price has to go past this, past this, past this, and past this in order to get out of the complete retracement mode and into back into an extension. Okay? That's what I mean when I say too much seller pressure. All right. 15-minute showed me a shooting star here around 9:45. Okay. Then on the 1 hour, you got the price below the 200 and the 50 moving average. Look like it's trying to work its way up. Okay. Then on the 4 hour, you got these two big ass red candles. All right. Show you a defined retracement, and then support here to let you know that it could potentially be turning around. All right. Then on the daily chart, you got this super small body with these big wicks trying to figure out if price is going to go up or down. But either way, it has to succumb all of the negative seller pressure that we got from yesterday's seller's market. And then you got the stochastic pointing down and the RSI pointing down on the daily. All right. So that was basically top-down analysis from monthly all the way down to the 15-minute, showing us whether it's a good time for us to buy in or not. Again, if you want to go off of the 4-hour chart and jump in, nobody's going to look at you wrong for doing that. Okay? I would feel comfortable going in right now as well. But I want to minimize my losses as much as possible. And when I enter the trade, I want to see plus, I want to see green, I want to see profit almost immediately if I can. So that's why I go all the way down to the 15-minute and I wait. I'm patient. Also, what I forgot to mention, stochastic showed me divergence. Divergence, all right? This low point here is lower than this low point here. But on the chart, this low point here is higher than this low point here. So the divergence, I put down my trend line to let me know where price is going. And that just gave me a confirmation that price is pretty much about to change. And the actual retracement could be potentially over with. But I still have all these other checklists to mark off. All right. So I'll put an alert here to let me know when price is getting close to the pivot. I want to see price cross over the pivot. Then I need to see what's going to happen with these moving averages. But once price crosses over the pivot, I'll be comfortable enough to go into this trade, because that will let me know that this shooting star right here is pretty much irrelevant, and the buyers have completely shown up. And then I also have all of that confluence back into my 4-hour chart and my daily chart, letting me know that we're done with the retracement. Now we're about to go back into an extension mode. And then my price target will be somewhere up here by the previous high or beyond. All right. Hope I got deep enough to where you can understand exactly what I mean by seller pressure. And then we talked about a few entries as well. Hope I didn't miss anything. If I did, just let me know. But the moral of the story is, be patient, give yourself multiple levels of confirmation, and use the time frames to help you get into the trade so that you can see where price is going, where price is heading, and then minimize your losses as much as possible. All right.